Hello, good weekend to all. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of the FTSE 100 from a weekend perspective for the trading, obviously Monday, which is going to commence the 9th of November, if I'm correct. I always get my dates wrong, unfortunately. I think that is correct. Okay, right. Let's see exactly what's going to happen in the week ahead. Fundamentals, as always, first. Basically, we have the Fed post NFP, as you can see in terms of the actual dollar rally. Before I start, be sure to visit cfds.com and with regards to your trading needs. Okay, and alternatively, visit the educational website www.cfds.education to certainly have updated charts and analysis and videos that I post. Okay, obviously market commentary throughout the day. Right. Let's try and decipher this. So the dollar index, let's start with the dollar index. Okay, as you can see, post NFP, we've broken out in the daily chart. Go to the weekly chart. Clearly a breakout. An impressive breakout of that as well. Okay, so certainly a breakout on the dollar index itself, and therefore you're obviously indicating a bullish move in terms of the dollar itself. Weekly at the moment, let's just have a look. Obviously going back 2013, obviously we're making new highs here. Obviously end of QE, etc, etc. So now tapering obviously is all priced in, etc. So basically we have the Fed raising rates, monetary divergence of basically the world over. Okay, and that obviously has forced commodities down. Now if I bring up the chart of commodities, emerging markets obviously is going to go lower. We have an unfilled gap below on emerging markets, and really it's all about the CRBQ. And as you can see here, certainly under pressure given the dollar impact. You have an unfilled gap below that needs to close on the CRBQ. So certainly looking for further moves lower on the CRBQ in terms of just based on the NFP alone. So it's all about Fed hiking rates in December. A stronger dollar obviously is negative for the FTSE 100. Okay. Now the other factor that's obviously going to hurt sentiment going into Monday is the fact that we've had Chinese data over the weekend, and imports are down quite drastically, and exports are down as well. So again, that's a negative factor altogether. So less demand for commodities, add in the fact that you have a stronger dollar that hurts commodities, and the situation doesn't look very spectacular, let's say the least. Let's just say that for now. Okay, looking at Glencore, you have an unfilled gap on Glencore. So given the fact that Glencore has been the main proponent or the main market mover in terms of the FTSE 100, you can clearly see that that's exactly where we are. Just draw this trend line correctly. Here we go. Just delete the one above. So a stronger dollar, adding weaker Chinese data is certainly negative. Okay. Not only is that negative, we also have the further hawkish comments from Mr. Evans over the weekend. So again, negative. Okay. Volkswagen concerns remain. Tata Motors certainly posts a loss. That certainly isn't bullish for the actual markets going forward, especially in terms of commodities, and also Lonmin as well. Okay, so another commodities producer, etc., or commodities or a company that operates in the commodities sphere, certainly indicating a move lower. So a lot of reasons for the markets to certainly go into a risk-off scenario come Monday. Now, I based on my Twitter feed, as you can see, I've been short the FTSE and short the Aussie going into the weekend, and also short the Nasdaq as well. So I'm expecting downside movement regardless. Okay. Now I'll explain the Now that I've explained the fundamentals level, let's have a look at the technical picture now as to why I think the FTSE 100 will certainly obviously trigger off its move on the downside, given the fact that we have these two double whammy concerns with regards to a Fed rate hike and obviously lack of demand for commodities, given the fact that Chinese data is certainly weak. Now, before I bring up the FTSE, I just bring up the chart of the Shanghai, which is quite important. As you can see in the daily chart, we have this diagonal trendline resistance, and obviously you have an unfilled gap below as well. So given Chinese data is obviously weak over the weekend, I am expecting that gap to close. Certainly expecting gap fill, okay, in the Chinese markets. Now, going back to the FTSE 100, okay, bring up the FTSE 100. You have a daily chart. We've obviously broken out of this symmetrical type of wedge, and we've broken lower given the fact that you have a stronger dollar. Adding weaker Chinese data now, and the next support level on the FTSE is looking at 6,315 to 6,270 in the FTSE 100. Going to a 60-minute chart, the FTSE 100, you are looking at a potential, obviously, double top scenario there. Okay, horizontal resistance held. The market's flushed. We've negated this bullish green candle here post BOE, and obviously the market sold off thereafter. So We've held the neckline as well on this spike post NFP, and now the HNS formation has a target of 6260, and that certainly is the next zone that we're looking for to hit. 10-minute chart, the next support zone on the FTSE 100 is 6320, and as you can see, you are in a series of lower lows and lower highs, and that certainly resumes. Okay, so overall, the technical picture for the FTSE certainly remains weak. Now, if we verify that with the FTSE 250, you can see that we're holding horizontal resistance in the FTSE 250. So therefore, you're looking at weakness. The 60-minute chart on the FTSE 250 is exactly the same as the FTSE 100. You can clearly see that we're putting a double top, and now we're making a lower high. And you have this HNS formation in play, and therefore you're looking at weakness on the FTSE 200, 250 and 100 going into Monday's session. Looking at the volatility index on the FTSE 100, you can clearly see volatility index, and the FTSE is putting in an inverted head and shoulders formation. When you see an inverted head and shoulders formation on the VIX, what does that mean? It only means one thing. That means that we're looking for a spike, given the fact that I've already explained the two fundamental catalysts for the FTSE to sell off. China weakness over the Chinese weakness, basically. With regards to Chinese weakness, I'll just read this statement out to you. As tumbling imports show domestic demand is not replacing a slowdown in exports such as electronics and industrial goods, the data raises fears that the world's second largest economy is having difficulty sparking the internal consumer demand necessary to reach growth targets under the 5-year plan. The trade surplus occurs when a country exports, etc., etc. Chinese imports slumped 18.8%. Okay, during October when compared to the same month last year. So you're looking at an 18.8% slump in imports, and weaker imports means what? Means weaker UK exports. Hence the reason why you will get hurt in terms of the FTSE 100. And you will see weakness on the FTSE 100 as well, especially given the fact that you have this inverted head and shoulders formation, and you already are being hurt due to weakness in commodities post the NFP, i.e. a stronger dollar. And given the fact that you have lack of demand for commodities, that's a double whammy, and therefore you're looking at weakness on the FTSE, okay? And you can clearly see that with regards to the VIX is on the verge of breaking out to the upside, okay? Given the fact that it's putting in a higher low, okay? And that certainly is weakness. So the FTSE all share, we can cross-verify that. Horizontal resistance, previous support equals resistance is holding. You look at the FTSE Euro top 100, okay? Again, you've put in a doji candle, therefore signaling a potential reversal on the FTSE itself. And you can clearly see a HNS formation too as well, given the fact that you put in a lower high. Okay, so you take the Fibonacci retracement, take the pivot high, take it to the neckline. You're looking at a Fib 61% retracement, and then down you go. Okay, so with ferocity. And as you can see here, left this horizontal resistance certainly seems to be holding on the FTSE itself. Okay, FTSE Europe, you can clearly see that we've held that key downward trend line, and the FTSE Europe certainly is weak regardless, and that will certainly send the FTSE 100 lower. Looking at the price of oil, you can clearly see that we've flushed quite substantially. Given the fact that we've had weaker Chinese data and stronger dollar, it's looks like it's $42 is inevitable, especially given the fact that you have Chinese weakness and nothing to sustain the actual move higher. Now bear in mind also on Friday we did have weak German data as well. So again, the weakness in German data certainly has been transparent. And the rally itself was based mainly on the fact that we had the euro selling off quite substantially. Now the euro itself, the euro USD, if I just bring up the chart of the euro as well, this is going to be interesting. Okay, unfortunately I don't have the chart here for the euro, but you are looking at potential support on the euro. So again, that's another issue. I'll tackle that in my European market analysis. But with regards to the FTSE, you can clearly see that we certainly have a bearish bias, and everything else certainly seems to be realigning and confirming in that same direction. Also, one more chart before I go. Bear in mind that the S&P 500, if I have that chart here at the moment, Nikkei, Shanghai, FTSE, here we go. Okay, so the S&P 500 on the daily chart, remember, it's broken out of this rising wedge, and therefore that's indicating weakness. You have an unfilled gap, and you are seeing weakness into Monday's session. Now the S&P is making a lower high, so therefore confirming weakness. You're in a downtrend, lower lows, lower highs, and therefore down we go, and expect weakness on the FTSE 100 as well. Okay, I think that's a wrap, folks, and that should be sufficient for now. Be safe with regards to your trading session this week. Always adhere to good management, good money and risk management, and I wish you the best prosperous week that you can have. Goodbye now.